Good morning, all, and welcome to this week's webinar. This week, we're going to talk about setting targets that inspire performance more than anything else. But I think we've got to start to think when we talk about setting targets, what that looks like for people. And it's not just about setting a target, it's everything that goes with that and outside of that. So basically looking at certain stats on setting targets. HubSpot survey reported sort of results were nearly 40% of companies stated that they will fail to achieve their sales goal this year. Simply put, those that have goals are 10 times more successful than those that don't, and those that write their goals down are 3 times more successful than unwritten goals. Sales consultants spend only 28% of their week selling, and this they've done over a number of years. In 2018, that was at 34%. So it sort of shows what sort of the knock-on effect of COVID has had with regards to the amount of time we actually spend selling. 70% of sales leaders say that their company take fewer risks now than before the pandemic when it comes to selling. And 66% of sales consultants say that they are drowning in tools and haven't a clue which tool that actually helps them develop. Too many tools out there. 90% of sales consultants on or in high-performing teams say their leadership encourages them to prioritize long-term customer relationships over short-term wins. And 81% of sales representatives say that selling helps them close deals. And only 28% of sales professionals expect to meet or exceed their quota in 2024, but sales organizations aren't actually offering their help to actually enable sales consultants to achieve what they want to achieve, or what the business is pushing them towards achieving. So we're going to sort of hit this on the head right from the day go. Heather and Dave are with me. Paul is out on client site today. So I'm going to start with a question, okay? Now, Heather, you want to answer this one or not? It's your choice. We will have this debate every week, whether you want to come in on first. So we're going to carry on this debate from there. Okay, she's ready this week. Okay, so I'm going to change the order of the questions then just to really... No. Okay, so the question one then, how can a company effectively align its recruitment strategy with its long-term business targets and goals?
Okay, so I will go first then. I think it's a really interesting one, because so often we think about the recruitment goals of our clients, and I know this week we're really thinking about the recruitment goals of us as businesses, of our clients, not our recruitment businesses clients. So it's for those listening, this is about your recruitment strategies. I think our industry is fascinating in that there is such a direct correlation in our business between the amount of business we do and the number of people we have in our organizations. It's one of the rare organizations where there is such a direct correlation between the number of people that we have in our business and how much money we make. And so I think you really have to understand that relationship for your organization and for your market. And you really have to understand and have data on things like your speed to competency. So, it's really understanding what's the relationship between the number of people you bring in, how quickly they are effective, and how does that work in your market. So you have to have some really good data on this to be able to align your recruitment strategy with your targets and your goals, because there's a direct relationship.
Yeah, absolutely right, Heather, because I think data in this situation matters, because as we sit in our powwows together and plan our strategy for 2024, if we haven't done that yet, or you're thinking about doing that, I think it's important to look back at the data over the last couple of years that has said, well, how long has it taken you to hire the people you've got in your business? What are your retention strategies? How long are people staying with you? Why have the people who left, why have they left? When have they left? How long have they taken to leave? when you've onboarded somebody, how long has it taken to get them? And all of that data becomes really important as you put together your recruitment strategy and your sales strategy for next year. Because it's no good saying, let's go and hire 10 people if actually over the whole of last year, you struggled to hire 5. You need to know why you struggled to hire 5. Where were they? What type of skills did they have? So all of that is really important in terms of a recruitment strategy. You can't just have a good sales development, business development, strategic strategy without knowing how many seats you have, how many seats you're going to need to fill, and how long it's going to take to fill them.
I think I looked at this in a very simple way. I looked at it slightly different to how you two are looking at it. I looked at it that, as a company looking at your recruitment strategy, your long-term business targets and goals, the first thing you need to look at is what's the economic factors around the business at the moment that's happening. So what are the pestle forces, what's the political forces, the economic forces, the sociological forces, the technical forces, the legal forces, and the ecology forces, what's happening. And then if you're measuring your net promoter score and you're looking at your clients and you're developing your clients and understanding what your buying clients are currently doing, then you'll start to understand what your strategy needs to be with regards to setting goals. You can then push back and say, what is my average consultant's revenue per month or gross margin per month? And how am I going to build that and develop that? And I think once you start to look at those sort of simple metrics, it becomes a lot easier then to start to align your recruitment strategies and your business strategies alongside your business targets and your business goals. Where I think a lot of people just sort of put their finger in the air and go, we're going to grow by 50%, so let's do something like that. And it doesn't work like that. You've got to start to sort of look at everything that sits around your business to do that. And I think then if you look at that then, in the context of setting inspiring targets, what role does talent acquisition play, and how can you recruit? Well, how can recruitment teams contribute to this progress? And when I mean talent acquisition, I'm talking about talent acquisition coming into your business, not talent acquisition for clients. So when you're setting those inspiring targets, what does talent acquisition play with regards to your recruitment teams and how they contribute to the process?
I think many companies who are, shall we say, sub 10 or 15 people don't have an individual who is focusing on talent acquisition. It may be part of someone's job. The reality is, and I think we all know this, it is everybody's job in the business to hire people or to recommend the company. So I would include in any talent acquisition, what's your referral program like? Are you asking your clients who they get really good service from, what it looks like, and how does it look, and how does it feel, what's the experience like? Because that can inform you of the type of people that you want to get. Most companies prefer, obviously, not to go out to a rec-to-rec firm because they should be able to do that themselves. Are you networking? Are you seeing who's around in the market? So I think any talent acquisition strategy has to apply to as many people as you have in your business, rather than just one or two who may have that as part of their responsibility. I do recognise that some companies have one or two people that may be their sole responsibility is to hire people. But then sometimes the negative of that is that the company can just rely on those people to get people in, when actually that load should be shared across the firm.
I couldn't agree more. Whether or not you have somebody who is responsible for talent acquisition, it's never going to be, even in a small business, one person on their own can't do that. So, and in a large organisation, one person can't do that. So it has to be a shared role across many people. And I think that every manager in every business ought to have talent acquisition as part of their job. But in terms of Howard's question about setting inspiring targets, whoever is responsible for talent acquisition, I think part of their job is understanding the market, understanding who's out there, what's going on with your competitors. It's all about gathering data and information, isn't it? And being close to what's going on. So are trainees the right people for you to bring in? And if so, how quickly do you think they should be productive in your organisation? Are you bringing experienced people in? Are they, just because they've been experienced somewhere else, are they going to be experienced when they're with you? And it's, so your talent acquisition team, your people involved in talking to candidates potentially, and competitor organisations and networking and pipelining are all gathering data for you to let you know what's going on, as you say, Dave, in the marketplace. And that then enables you to set realistic targets that are good for your business, but also will attract people into your organization. And that then feeds into your reward systems as well. So they're all interlinked. And for me, it's all about listening to what's going on out there, turning outward rather than inward, and really looking at what's going on out there with your competitors and in the marketplace and with your potential candidates to come to work for you rather than candidates for your clients.
So I'm going to agree and slightly disagree on that point then, because I think you should be looking inwards as well, that you need to understand your attrition rate, and especially understand your attrition rate in year one. So if you're bringing talent in, as Dave said, if you're bringing 5 people in or 10 people in, but you could only do 5, how did you do that last year? But out of those 5 that you tried to bring in, how many actually stayed? You know, so how do you sort of look at that? So you look at understand your attrition rate in year one. I think what you're talking about with regards to, you know, when they get to an average billing, I think it's even more simpler than that. You need to know how quickly, on average, you get a new starter to their break-even point.
Yeah.
And then you need to calculate what you'd want their run rate to be at the end of the year. And I think if you go in with the expectation that you're not going to make money out of people or new people in that year, irrespective of if they've got recruitment experience or not, then you'll probably find yourself in a better way to target your business, because too many people who come in and target new talent coming into the business, and they're suddenly carrying a 100,000 target, 200,000 target, whatever it be, but they've got no chance of hitting that at all. And that's very understandable that you then start to put the pressure on new people, and therefore the attrition in year one is really high, irrespective whether it's a new recruit into the marketplace or whether it's an experienced recruiter in the marketplace. So I think understanding how quickly you can get that new starter to their break-even point, so you're actually breaking even and making money, and then calculate at the end of the year what that run rate would be. And if you think about the average in recruitment is to bill 120k a year, so that means at the end of the year they should have a monthly run rate of £10,000. You know, how do you get that? What's the KPIs that sit behind that, and how do you work that? And I think that then is you starting to set inspiring targets for your new people to grow and develop into, rather than instantly putting the pressure on them as soon as they come through the door that they need to be making money. And I think that's one of the big mistakes that we make, that we instantly think these people should be making us money when realistically they don't make money for quite some time.
Yeah, it's about being realistic, Howard, isn't it? You have to be realistic.
It is.
And it's different in different organisations. So you're right, there's an inward and an outward thing. You've got to know what your competitors are doing, but you do need to know realistically how good are you at onboarding people.
The smaller business, than what I tend to find, the business owner is more concerned with how much is this person costing me now, rather than looking long term and how much can this person actually bring into the business if I allow them time to develop, if I train them properly, if I understand the metrics and the ratios I need to get through, and how do I get them there. That's a whole different point, because too many recruiters, too many business owners think it's my money, which it is, but you've got to speculate to accumulate sort of thing. So if you look at that, are there any sort of specific KPIs? You mentioned KPIs there, and so did I, or performance metrics that recruitment professionals should focus on to ensure that they're supporting the achievement of the business target?
Well, the classic one is speed to competency, isn't it? It's that, what is, if you look back, and obviously the bigger organizations have got more data, but if you look back at how well you have onboarded people and how quickly they were able to start contributing, you can get some really interesting data curves on speed to competency, so you understand what your realistic data is. And for me, that's really powerful. And you would have a separate speed to competency graph for trainees than you would have for experienced people, and it will be different depending on your market and whether they're temp or permanent. all of those different factors. But I think there's some really interesting speed to competency data that you can then pin KPIs around.
Yeah. And I think also, Heather, to help with that is, for your business, define what competency is. Because each business has a different way of looking and saying, well, actually, this person is now a competent performer. They're delivering X. They're contributing Y to the team. Their value on the floor is whatever it is, and that can be different for each business. And to your earlier point, Heather, about that's why it's important to go back and look at what's happened before. Because otherwise it's a little bit finger in the air. This is what we think will happen. This is what we think the market takes. It should be 10K a month for everybody. 120K, then that's great. But actually what we learned, was it a LinkedIn thing we went to about 9 months ago, that said the average billings of an average consultant 30 years ago was £96,000. In 2021, when they last had the data, it was £96,000. Yeah. So is it that the average number is £96,000? And when we think about 10K a month, well, that's about 25%, 20% above what the average is. So you've got to know what the average is for your business. And actually, if you're running a bigger business with different offices, it could be, what's the average for your office compared to another office in that location, as opposed to another office within your firm. So there's a lot of data gathering to get to the right KPIs.
Honestly, if you look at the published data from those very, very large recruitment businesses that are publicly listed and therefore their data is available, that average of about 100K per head, that works across every size of organisation and has done forever. That doesn't surprise me in the slightest, Dave. That's broadly the average. So obviously there's going to be outliers at both ends.
Yeah.
That 100K, that's absolutely the standard metric.
And the thing is that we've all been in a situation where we've all invested significantly in much better tech. So as a business, we've all spent a lot more money on making our salespeople more productive. The reality is, with the data that we presented, it hasn't made the difference. Of course,
well, and that's a whole subject of a whole nother webinar. But that ability of new tech to change productivity metrics, there's very little evidence around that.
But it's important in the context of this that we know where that all fits in.
Yeah.
So if you think what we're talking about is, and this is what everyone's sort of drilled, is that we're talking about setting annual targets and using SMART as an outline to do that. However, I often think, does that really work? Because our brain is set to look for the nearest goal. So if you set a SMART annual target, it means that I don't really start to think about that target until 11 months' time. But we break our targets down then into monthly, we break them down into quarterly, etc. So my comment would be, why not just set quarterly and monthly targets for people? Obviously, when you combine them, they hit their annual objective. But we look to make our targets smart. But I think to make a target smart, it doesn't really work. It only works when you start to make that target very personal to the person, and you make it in the present tense. So what actions are you taking today? So if you're looking at smart targets, it's not about money. I'd be thinking about smart as in how many new business customers do you need to build in this month? How are you going to achieve that is your metric, okay? A is, how are you going to attain that target? Are they realistic? What's the number of client visits that you need? Is it 5 or is it 25? Is it realistic? You look at, are your targets relevant to the business mission statement and the company values? And as said, a monthly target, is that better than a quarterly or an annual target? But if you reward monthly, then you should have a monthly target. If you reward quarterly, you should have a quarterly target. If you reward annually, then it is an annual target, because that's when you reward people, and the reward is what drives behavior and how behaviors work. So when you start to set your targets and talk to consultants about your target, if you're talking about an annual target, but then giving them monthly targets to achieve and paying monthly, really we should be only talking about that monthly target, because that's what they're trying to affect and that's what they focus on, rather than looking at their annual target. So
I'm sure they're mutually exclusive though, Howard. I think you can have monthly targets, quarterly targets and annual targets. And
I think
it depends on where they sit in the organisation. Because the more senior you are and the wider your sphere of influence, maybe the longer timescale you're talking about for targets, because it takes longer to influence.
And that's exactly what I'm trying to sort of say, that if you think about as a business owner, you'd be thinking about what you're trying to achieve over that year. But then I come to you as a consultant and I give you a 12-month target, when really I should be saying what I expect from you is monthly. This is what I expect you to bring in. So I only want you to focus on this month, but I'm focusing on my annual target. And as soon as if I fall behind my annual target early, it becomes a real pressure to achieve, because I've got that drowning pressure. And if I go back to the Adecco days, we remember talking about the annual performance rewards, going away on big annual trips. And we said, it's an absolutely pointless thing to be promoting across the whole business. And they said, why? I said, because the same top 10 people on average, about 80% of them are the same every year, because they're the major billers. So within month 2, you've already disengaged 80% of the sales force. So if you did different targets and different things, and they eventually changed it, then you start to motivate all people. So you've got to start to think, if they're shorter, it motivates people more. So if we think about that, then, we've all worked for large companies, we've worked for small companies. Could you sort of share examples of companies that have had successful or successfully integrated recruitment and goal setting to drive growth and innovation?
Well, I can think of one that right now has taken on board, I guess, some of the things that we were talking about last week, where, if you recall, we said last week, short term is 6 weeks and long term is 6 months. So if you think of that in the context of target setting a 12-month target, you may miss things as you go away. So they've started to set quarterly targets, and then they're refreshed every quarter. It's a nightmare for the CFO because in this case he's a he, but he likes to know from a cash flow perspective and a P&L and a EBIT and all. He likes to know what the budget is, and yet the CEOs have said, actually, we're just going to do it every 3 months, and we're going to see where we are and start again. So I think it will be interesting to come back in maybe 6 months' time and see how they're getting on. I think some of the other KPIs that are quite important are things like number of networking groups you've joined. So it's not just about the number of CVs you've got out and the usual KPIs we have. Things like number of relationships you have within an existing customer, because these are things that you can measure. We've said before, I used to deal with Ford, and I had 10 people I knew really well. The 27 people I didn't know were hiring more contractors than I ever knew about. So it's that bit of how close are you to the individuals within your customer, and how many individuals are there, and do you know them? So I think those sort of KPIs do drive accelerated performance, in addition to the usual ones. I hate to hear it. When I hear it, how many calls have you made today? My heart always sinks, because they're not quite as relevant as they once were.
Mm. The last very large organisation I worked with used the speed to competency graphs really well, Howard.
Right.
So gathering that data and then being able to, once we've got some in this market, with this type of trainee, with this type of desk, this is what the speed to competency should look like. And to then be able to compare individual teams against that and look at outliers drove some really interesting behaviours and really interesting growth. So people's expectations, you could create some really interesting expectations. You could look at why it was that some teams were able to constantly exceed the average expectation, and why it was that others weren't getting it, and maybe some teams shouldn't have trainees with them. And so it really drove some interesting behaviours that made the onboarding, the training, the development, and the expectations and the target setting for trainees, much more sophisticated, the support available, because you could measure when it wasn't working and put the right interventions in place.
So I think when so the big companies that I've worked at, some of the things that really worked for us was that we segmented our sales goals, segmented them down. So like you were saying there, into the style of person, the capability, the capacity of the person, the capability and capacity of the team, the environment they were in, etc. We then had a slightly different view of what we did. We always got our sales goals given to us by the bigger machine in a depot. And what we tended to find was then we had to create our consultant goals from there. And so what we tended to do constantly is we would have our consultants' goals exceeding, when you combine them together, more than our corporate goal. So we knew that there's always going to be consultants that aren't going to make target. And so we had to counterbalance for that constantly. And therefore, what we did was we set our business goals lower than what our combined consultant goals would be. And therefore, we ended up starting to hit target because we were pushing from a business point of view, but we were also pushing from an individual point of view. So our business goals was very much split away from our consultants' goals, where I think we get to a lot of recruitment agencies and they have a goal that is basically their consultants' goals all added together, when we know that realistically is going to be really hard to do. So we then split our teams and we based them on things such as client retention activity. And we applied that to the team and to the individual for a growth. We looked at measuring our net promoter score constantly for each individual person on their businesses and what was going. That allowed us to then segment how much new business we had to bring in that year to achieve target. So constantly, what Dave was talking about there, we had a really good view of what the customer lifetime value was, and when that customer would stop recruiting or potentially stop recruiting. So we knew we had to start business development way before that to replace that client. And that way we constantly had targets for activity, not just financial reward. And that activity was to ensure that in 3, 6, or 12 months' time, that our business wasn't going backwards. So constantly looked at the activity that was being put into the business, not just the financial output from the consultants. And that enabled us to really sort of push or integrate our recruitment strategy and our goals to help innovation within the business, because we suddenly realized that we had to innovate to be able to capture clients, retain them, but also bring new clients to us. So we spent an awful lot of time studying that when we started to set targets. It wasn't just what could all my consultants do combined, it's how do you actually get to that, but have a business target below that. So when it comes then to predicting future talent needs, and this is both for your business and for your clients, what strategies or data sources should recruiters leverage to ensure that they are proactive rather than reactive? Because at the moment we're seeing a lot of reactive market and not a lot of proactive stuff that should have been happening 18 months ago. But if we're proactive now for what's coming in 18 months' time, or in Dave's case, 6 months' time, would we be better?
I think this is a fascinating question, Howard, because if you look across our industry, the difference in some recruitment businesses and the type of people they're trying to hire, and the fact that there isn't a difference in some, is really interesting. So we all, there's this cliched view of what a good recruiter might look like and how they might manifest themselves. And actually, recruitment has changed a lot over the last few years. And so the type of people we want to bring into our industry and that we should be hiring as trainees is different. And we know that there's been a huge change, a move away from 360, and so the role is different. And I think that I've seen many organisations who don't really get that, and so they're still making the same hires and they're still using the same questions and the same criteria to hire people in, and the same reward systems to reward them, when in fact, not only is recruitment changing and the way we work changing, the pool we're fishing in for trainees is changing, and the kind of people who are actually out there, the kind of old school typical trainee we would have brought into the industry 10 years ago. There are very many less of those available now. So I think, so again, it's about consciously doing this stuff by thinking about what's the job going to be like? How is the job changing? How's my organization changing? How's the market changing? How are my clients changing? And does that then mean that I need to bring a different kind of person in? And how am I going to do that? And I know there's a question coming up about best practice, so I won't get into that. But I think it's just really becoming consciously competent about your hiring strategies and really thinking about who it is you're bringing into your business and why. And I've seen some fantastic examples. I think I mentioned this before. I've been a judge on a couple of different awards recently. Seen some fantastic examples of the way in which recruiters are influencing the market with clients. So actually creating training programs for their clients.
Yeah.
So actually working with their clients to widen their pool because they're giving people the skills they need to fill their clients' needs. So almost segueing into being a training provider as well as a recruiter because they're filling skills gaps. So I think there's some really interesting and exciting stuff going on, but it's about consciously knowing what's happening in your marketplace.
And I think that's that whole combination, isn't it, Heather, of market intelligence and business intelligence.
Yes.
Which is where having someone who's focused on marketing and customer experience and customer engagement is so important. We never used to think of it that way maybe 10 years ago. Now it's absolutely vital because the type of people you will hire will be different if you're expecting them to have very intelligent business and market conversations about workforce planning, about training. Train and deploy is a very, very strong thing. It's the Tiara Awards tonight from Talent. And a lot of the people that will be up for awards are those that have engaged much more deeply with their clients and have done things like you just said, train and deploy. Well, you need to have a slightly different person who can have that conversation than, with respect, someone who's just used to bashing the phone, because that's not the way that customers buy. So if you can understand the way customers buy, what they think they want, there was a Steve Jobs quote earlier on, don't always give your customer what they need, because by the time you built it, they want something else. But if you can work with them in an intelligent way, then you're going to have more success. But then you've got to be more intelligent as a recruiter.
So I think that relates to what's that recruitment cycle? What's your client cycle? What's it look like? And we've talked endlessly about getting close to your client to find out what their workforce planning needs are, so we can have eyes up recruitment rather than eyes down recruitment. So if we can understand that, then we can start to take that data and say, I know that in 6 months' time, most of my clients are going to be recruiting. I know in 5 months' time, half of them are going to be recruiting. So we can start to think, do I need new business development people? Do I need delivery people? Do I need client management people? And if you start to sort of review the market data, there's lots of data coming out of the REC, ABSCO, the ONS, the CBI, etc. They all give you indication of what's actually happening in the market, but also what's going to happen down the line. If you remember when lockdown came, all the analysts said very, very straight away, this is going to be a bathtub recession. It's going to drop very quickly, a very shallow bottom, and then it's going to come back really, really fast. And that's exactly what happened. It dropped really quickly, shallow bottom, and it came back absolutely at lightning speed. So if we're listening to what the economists are saying and what's going on, then we can be more proactive and reactive. If we know what our clients are doing in 3 months, 6 months, 12 months time, rather than what are they doing today, then again, we can be more proactive than reactive. So your sales cycle, your marketing cycle, and need to be in line with your business strategy so you can preempt the market. So if you think you've got a 3-year business plan, then you've got to start thinking 3 years' time, how many people do I need to start in 3 years that will have 12 months experience, the run rate that I need to hit that 3-year target. So you start to preempt those sort of things really early on, rather than, as people do, it's finger in the air recruitment. So predicting future talent needs is what your clients need and what you need, but then looking what the market cycle is going to be like, so you can do that. So we keep talking about, best practice to a certain degree. So what are some forms of best practice for maintaining a diverse and inclusive workforce whilst pursuing our ambitious goals?
This is really interesting, because the question is maintaining a diverse and inclusive workforce. And I actually think a lot of recruiters have got a long way to go to obtain a diverse and inclusive workforce, never mind maintain one. So can I please edit the question slightly that I answer in a very
edit away.
Howard. So one of the things I think that we need to be much better at is training the people who are doing the hiring in our business. So I've come across many recruitment businesses who are not all of them, but this is true of a chunk of recruitment businesses who are full of the same, and then those people hire more of the same, and it's not in any way a deliberate and conscious decision to do that, but it happens accidentally because they're not trained in how to recruit for themselves. So they're trained in how to be great recruitment consultants and to recruit for the clients, but they're not always trained to recruit for themselves. And I think I just am constantly surprised by the number of people I talk to in recruitment businesses who haven't actually really consciously thought about what it is they're looking for, and really nailed it down. They have kind of a vague idea what they're looking for, and also don't really know how to get the information about whether that person has those skills and behaviours and values. And so they end up hiring in their own image, because that's really easy to do if you're not trained in how to do it properly. And so totally unconsciously, you end up with an organisation full of people who are all very similar. And you can break that cycle quite quickly by just thinking about it and by training. So that's one. There's obviously way more to diversity and inclusion than that, but the starting point for me is having the people who are doing the hiring into your business really well trained in what they're looking for and how to find it, and how to avoid those pitfalls of only hiring people who are just the same as you. And I had a really good example of that with an organisation I worked with a few years ago that was filled with kind of clones of each other, all the kind of same age category, all men, all white. When you looked at it, they never hired trainees. They always hired experienced people, and they did it by pipelining from LinkedIn. And on LinkedIn, they were connected to people who were just like them, who worked in the same market. And so, of course, it was never a conscious decision to only recruit from one market, but they were only fishing in one pool. And so we had this debate, and we said, okay, just for the next 3 months, deliberately go out and connect with people who don't look like you, who work in different markets, who are a different age from you, and then do some pipelining. And it was amazing how quickly you changed the profile of the people who were coming into the organisation, and how you started to mix up the culture, and actually it went on to become more productive and more successful as an organisation. But it was quite a small change. So I think sometimes it's looking at these things can be really helpful, and just putting some emphasis and focus and some training behind it, you can start to make a huge difference. So that's not quite what your question asked, Howard, but I think it's something I've seen and learned from going around this industry.
I think the question is such an important one, because what I find in my experience of working with recruitment companies, many of their clients are asking them for diversity and inclusion reports. What are the type of people what candidates are you reaching out to? What skills have they got, from what ethnicity or disability or whatever it may be, however they phrase it, their clients are asking the recruiters. And what I've said to some of the recruitment owners is just stop for a minute and answer those questions for yourself. Because if you can reach out to a more diverse and inclusive workforce, you're going to find new intelligence, new innovation, new ways of reaching out. You're going to find that there's pools of talent that you've never really tapped into. And so it's a dual-edged thing. So I think you go back to the purpose of the webinar and thinking ahead as we're looking ahead to targets. I think part of the target is to look out and reach out to other areas that you haven't done so before in the way that your clients are asking you to do for them.
So I think if you're looking to maintain a diverse and inclusive workforce, then we've got to change what we do from the current norm. And I think what we do at the current norm, targets are often based on past performance. Targets are allocated inappropriately, sometimes right across the workforce. Targets are frequently perceived either to be too high or too low, and we often have the wrong measures in place. Sometimes our whole business target and our whole business strategy is just one financial indicator. It's not about what's going on. And targets are sometimes, given to salespeople. So there's no real negotiation on that. And I think if we change that to be a little bit more clear and concise and make them measurable and attainable, make them fit the organization goals, but make sure they cover the short term, medium and long-term objectives of both the consultant and the business, but they contribute to job satisfaction and improved performance. And that means we can't encourage sales performance engagement in dysfunctional behaviors, which we see constantly out there, because what tends to happen in those businesses that haven't got a diverse and inclusive workforce, as you're talking about, Heather, there's usually one or two really key salespeople that dominate the culture of that business, and therefore diversity will never happen. So we've got to start to change from the current norm to be a more inclusive guidelines and look at how we, I suppose, disenfranchise those behaviors that make the culture dysfunctional. So, final question. In the ever-evolving job market, how can organizations adapt their recruitment strategies to remain agile and responsive to changing business targets and industry trends?
That's a huge question, Howard.
It's a huge question, isn't it? I think some of it goes back to the way that we've answered some of the questions before, Howard. I think the most important question for me right now in this market, if you're phoning up clients, is not how are you and how's your business going, but the question is, did you know that? Did you know that there are 10% less people available now than there were 20 months ago? Did you know that there are 150 Java people in your immediate area? Did you know that teacher recruitment is down 3%? In other words, phoning a client and giving the client some data, some information that can help them with their own recruitment strategy. That way, you build a closer working relationship with your clients so that you can understand what their recruitment strategy is, and therefore you can build your own retention and recruitment strategy around that. Because if you're giving them information that nobody else is giving them, if you're using data from the REC and the ONS and Talent and other organizations and Jump that is available to you to use, then you're having an intelligent question. And if you have the answers to those questions, that can help drive your strategy.
I've got a slightly different thought on that, which is, for me, if you're going to adapt your recruitment strategy to remain agile and responsive to changing business needs, you've got to have a recruitment strategy. So actually have a recruitment strategy, have it part of your business planning, and remember that recruitment strategies aren't short term. So when you're hiring people to come and work for you and onboarding them, they are not going to be productive overnight. There will be a period of time before they are the most productive they can be. And so your hiring strategy, your recruitment talent acquisition strategy for your own business has to be slightly longer term than some of the targets that David Howard have been talking about for other things, because What you're doing with your hiring is planning for your future needs. And that can be really challenging in a market that moves. But your growth plans in your organization don't have to be solely linked to the market, right? Because your performance will be directly related to the number of successful, productive people you've got in your business. So your growth strategies don't have to move as quickly as some of the other market things. So having a long-term strategy that's linked to your recruitment, I think, is really important. And that's how you stay agile. Keep it under review, but understand that you can't make decisions today that you can implement tomorrow when you're talking about a talent acquisition, because the amount of time it takes to pipeline good people into your business and to onboard them successfully and make them productive, these are longer term actions.
So I think your target should be there to inspire performance. And therefore your business plans, your recruitment strategy should be linked to how those targets work. And then your commission plan needs to be linked back into them to then ensure that they drive the correct behaviors. And by rewarding those behaviors, then you start to drive performance. So if you start to see changes in the industry, then you can start to tweak your commission plan to match what's actually happening there. So if you suddenly find that your client retention is dropping, then you tweak your commission plan to increase client retention. If you need more new business, you tweak your commission plan to drive more new business. If you want to increase your placement ratios, you tweak the commission plan. So your strategies and your targets should remain reasonably solid and stable all the way through. But as the cycles change and things change within your clients, if you tweaked your commission plans, it will drive different types of behaviors that will enable the business to grow and scale and keep moving constantly in that marketplace. So I think it is about looking at what's evolving and what's coming down the line, and not necessarily changing your strategy, but making your strategies in line with your targets, but then tweaking the commission plan. Because again, I see so many people say, well, miles off target, but they've done nothing to change the behaviors. They've tweaked nothing on the commission plan to drive different behaviors. We're not doing any new business and our current client base is shrinking. Well, why aren't you doing something on strategy for, a retention strategy and reward on that? Why aren't you doing something on a new business strategy and reward on that, etc.? And therefore you drive the right behaviors constantly. And I think we're too knee-jerk on that because we're not looking far enough down the line to see what those things are happening. So I think you've got to be a little bit more consistent in your strategy and consistent in your goals, and tweak your commission plan to drive the specific behaviors that you need.
Nothing to disagree with there.
Just a thought.
Good topic.
So that's it for this week. Next week, we've got a very interesting conversation to have next week. And I think it'll be really interesting to see, how people react to the conversation. And the conversation is this. 2023 has been a really hard year for everybody in recruitment, or for most people in recruitment, let's say. So have we burnt out our staff? Are our staff really motivated to actually get into 2024 and have a different year and a different type of performance, etc.? So next week, that is what we're going to discuss. Have we burnt our staff out this year, and how are we going to reignite them? How are we going to be the catalyst to drive performance next year to make sure that 2024 is a very different year? So Heather, Dave, thanks very much for your time. Ladies and gents, thanks for attending, much appreciated. And I look forward to seeing you all again next week.
Thanks everyone, have a good week.
Bye.
Cheers, H.
Cheers, Dave.